Hello, everybody. Welcome back to another episode of The Lunch Hour, brought to you by Constant Collab, where we eat, sleep, and breathe finance, news, and everything in between. So if you like finance, news, and crypto, make sure to subscribe. Keep in mind, this video is for research and entertainment purposes only. We are not financial advisors, so make sure to do your own research and consult with a professional. We have a great show lined up for you guys today, so let's dive in. So, looking at coin market cap, there's been the current market cap for the entire crypto is 2.5 trillion. The volume, it's pretty low. It's only 87 billion, 87.5 billion. Bitcoin dominance remains at 45.1%, while ETH is 18.9. The market, again, it's pretty mixed. Bitcoin is holding support around 60K. Ethereum around 4. It's turned the 4K resistance as support, so it's holding right there pretty good. The story of the day, though, the meme coins. Shiba Inu is up 48.3%. 48.3%, 61% for the week. That is insane. That's really awesome. Wow, Shiba Inu. I think this is on rumors of listing on Robinhood. Those rumors have been going around for the past few days, so it's moving pretty well. The top 50, it's pretty mixed. It's pretty mixed for the day, for a Sunday. It's quiet. So let's jump into the news. 26.4% of Australian crypto owners hold Cardano, while Dogecoin remains the US bet. The US loves their meme coins. That's not surprising at all. Finder recently published a survey that dived into current market trends across 22 countries, uncovering cryptocurrencies besides Bitcoin are driving the adoptions across the globe. Global crypto adoption. The survey results reveal the key global cryptocurrency trends as adoption continues gaining traction worldwide. Currently, a little over 1 in 10, roughly 11.4% of adults own crypto globally. That's a key point right there. That's a key point for people that, is it too late? Is it too late? No, it's still early. It's a little late in the bull cycle, maybe, perhaps. Big money's made during the bear cycle, when prices are low. But overall, when it comes to crypto in general, you're early. You're super early. Nigeria has the highest rate of cryptocurrency ownership in the world, with nearly a quarter of its online population saying they own a form of cryptocurrency, followed by Malaysia at 18% and Australia at 17.8% respectively, according to the results. While the US ranked 10th with roughly 10%, Japan surfaced as the country with the lowest adoption, with only 4.6% of adults owning crypto. That's actually that number right there is very surprising to me. The Japan one, for them to be so technologically advanced, to only own 4.6% of crypto, that is very, very, very interesting. Hey, what's going on, Brian? How you doing? So yeah, and then the US at 10th, that's also very interesting to me. I would figure that countries with more established, more developed countries would have a higher crypto ownership. Nigeria came up at number 1 with nearly a quarter of their population owning crypto. That's very intriguing. Among those that own crypto, Bitcoin has the highest adoption in Japan, with 76.7% of adults owning the cryptocurrency. Ethereum has its highest adoption in Singapore, with 52.4% of adults saying that they own ETH. Cardano has the highest in Australia, with 26.3% of respondents saying they own Cardano. Meanwhile, Dogecoin sees its highest adoption in the US, with 30.6% of crypto owners claiming they own Doge. I'm assuming that here, if they do the survey again, Shiba Inu would be pretty high. A lot of people that own Doge would probably say that they own Shiba also. We the US, we're known for gambling. We like to gamble. We like that stuff. So we like to take our chances, the lottery and stuff like that. So people saying that they own Dogecoin is honestly not surprising to me at all. At all. So that's very interesting information right there. But moving on. Robinhood CEO confirms crypto wallet waitlist hits 1 million as SHIB army presses for listing. This is big news when it comes to crypto overall. So Vlad, the CEO of commission-free investment platform Robinhood, says that business had received more than 1 million application for its crypto wallet. This is awesome. So pretty much, Robinhood is going to allow people to move their crypto in and out. They're also going to serve as an on-ramp, meaning that you will be able to sell your crypto there and move it directly to your bank, and transactions will be seamless. And to be able to trade commission-free on Robinhood and then use it as a on-ramp and off-ramp will be great. But keep in mind, Robinhood, they do sell equities there, meaning stocks. So they do report to the IRS. They abide with SEC laws. Not that that's a bad thing. I mean, that's good for the whole ecosystem. But if you're trying to be incognito when it comes to your crypto purchases and stuff like that, Robinhood is not the place to do so. So that's just something to keep in mind. So he says, we are very proud of our cryptocurrency platform and giving people more utility with their coins. He said on the summit. So yeah, this is awesome news, and it's looking great for Robinhood. I think they have a bright future, and if they do decide to list SHIB on it, I see the volume skyrocketing and literally going to the moon. So that's something to keep an eye on when it comes to if you're going to purchase Shiba Inu. Do it prior to the listing on Robinhood. Just not financial advice, but a word of advice. And then how NFTs are empowering recording artists and helping the industry. Blockchain is rapidly becoming the innovative force industry insiders have been promising for years. The number of projects and artists offering their works using the core technology may be shifting from the current economy model to one that musicians can operate on their own. Non-fungible tokens, or NFTs, allow independent artists to earn income and engage with their fans more directly. That's to be expected. That's the point of the whole crypto ecosystem. Take out the middleman and allow for more interaction between artists, actors, and their fan base. In March, 3LAU, an electronic dance producer, sold more than 11 million worth of NFTs for redeemable real-world goods, including music. Many venues around the world are still unable to hold concerts and stuff like that, so they are moving to the metaverses and NFTs as an alternative. The pandemic has hit everybody, including mainly actors and music singers and artists. So interacting with their fan base on the metaverse has become the thing, and it will be the thing of the future. Video games like Fortnite, they allow their players to attend concerts by in the metaverse in the video game, which I mean this is crazy, and it allows artists to make a living while physical venues are shut down. One project claims to be revolutionizing the music space, offering music fans creative access to top artists while whetting the palate of blockchain newbies and veterans throughout the merging of blockchain technology and mainstream entertainment. I mean, the music industry will be huge for the metaverse and blockchain as a whole. They are going to bring people into the ecosystem. Just this right here is big. Animal Concert says its business model is focused on bringing in 100 million crypto users into the space in the next 12 months. That's the only sentence you need to remember out of this entire article. If this happens, I mean, this is huge for the ecosystem, because not only does it bring people to watch virtual concerts and stuff like that, right away it triggers into their mind like, wait, what is this blockchain thing? Let me do a little more research. Let me look into it. So they right away run into CoinMarketCap, one of the most visited crypto websites out there, and then they start seeing the top 10 crypto, the top 20 crypto, and then they like, whoa, this is the future. Let me start buying, start investing. So this is something to keep in mind when it comes to the future of investing in metaverses and NFTs. And I mean, the music industry will have a huge impact when it comes to crypto as a whole. Is hyperinflation inevitable? Jack Dorsey says it'll change everything. When Square's boss Jack Dorsey talks about hyperinflation, the world listens and Twitter reacts. Since so-called developed economies are now feeling the pain that inflation brings, the concept is in everyone's mind. Every human has a front row seat to witness the consequences of the United States' relentless money printing, and since the dollar is still the reserve currency of the world, they're all feeling it too. That's the truth. The US prints more money, more people are affected by it, more countries are affected by it. So if you think that other countries are being affected by the US money printing, how do you think it's affecting you? Living in the US, your savings account is most likely in dollars. So the more money the Fed prints, the more devalue your dollar becomes. Keep that in mind. Hyperinflation is going to change everything. It's happening, says Jack Dorsey. As you can see, he doesn't merely talk about inflation. He goes for hyperinflation, which caused adverse reactions in their replies and quoted tweets. They accused him of fear-mongering. Yeah, it's a little extreme since, I mean, we're not even in double-digit inflation quite yet. But if I'm not mistaken, this year, thus far, we've hit, I think, 6% in inflation. So, yeah, hyperinflation might be a little extreme when it comes to this tweet in the current time period, but maybe he's thinking in the future. It could happen. I mean, the U.S. is no different than any other country. Venezuela has gone through it, Nigeria, Iran, Turkey. So it's simple. I mean, the more money spent by the government and is printed by the Fed, the more devalued your dollar becomes. And let's say countries like Russia and China, they hold the U.S. as reserve currency. If they start getting rid of their dollars, that's just a chain of event that I don't even want to think about it, to be honest. I mean, we're talking about retirement plans being wiped out, people being completely broke. I mean, catastrophic stuff. So that is something to keep in mind. So let me see. Right here, this is something that I wanted to cover. The Human Rights Foundation's Alex Gladstein, a notorious Bitcoin maximalist, had this to say. Those shocked by this tweet live in a bubble for financial privilege. 1.3 billion live under double, triple, or quadruple digit inflation. Turkey, Nigeria, Ethiopia, Iran, Lebanon, Venezuela, Cuba, Sudan, and beyond. It's already one of the biggest humanitarian crises. He's not lying. Hyperinflation is already one of the world's biggest humanitarian crises. So it's insane. Should you be scared? Yeah, I mean, it's a big issue. And it will affect a lot of people around the world. I mean, he said it, 1.3 billion. That's a lot of people. That is a lot of people. So if the US keeps printing money the way that it is, it's going to hit home, and it's going to hit home hard. Keep that in mind. Some investors are putting more money into cryptocurrencies than stocks. That is to be expected at where the stock market is right now compared to the crypto market. The stock market, I've been saying it for the past year. The stock market is overvalued, it's overpriced, and I mean, it's been literally, if taking out the Corona dump of in March of last year, the stock market has been in a bull cycle for the past 12 years since the 2008 financial crisis. If you look at the charts, it looks like a parabola, the way that the stock market has been moving. The S&P 500, the Nasdaq, the Dow. So in September, crypto investors put an average of 263 into accounts dedicated to coins, cryptocurrencies, more than the average 250 they put in traditional brokerage accounts. Month over month, the amount that users are putting into their crypto or traditional investment has shifted, said Amber Foucault, head of product at Cardify. So far this year, nearly 25% of the money that investors are putting away is going into crypto, a big jump from 5% last year. That is huge. That is huge. And I think a lot of it has to do with FOMO, fear of missing out. They hear more about, social media, people talking more about crypto, and they're like, oh, wow, this could, I don't want to miss out on the move. So let me put a little more money over here. The shift towards favoring cryptocurrency over stock is being driven by novice investors, new investors. 70% of those surveyed have been trading the assets for less than a year, according to Cardify. Most cryptocurrency investors surveyed wouldn't consider themselves experts on digital assets, possibly because some of them are new to the game. A majority said that they have only limited or moderate understanding of cryptocurrency, and that's perfectly fine. Don't be afraid. Do your own research. Look on YouTube. Google it. I mean, you have to learn about cryptocurrency and investing in assets if you don't want to get left behind. If you are hoping that that your Social Security will carry you through retirement, think again. The way that the government is spending, and the way that we might not have Social Security, Medicaid, Medicare in 10, 15 years. So you have to start doing your own research, and everybody starts as a beginner. You have to learn when it comes to new investing vehicles, and cryptocurrency is the newest one. And then in politics and stock, this is like a mixture of it. Trump's volatile return to the stock market. Your boy Donald Trump has returned. Donald Trump this week became both a meme stock and a social media entrepreneur at the same time by announcing that a new company called Trump Media and Technology Group was going to merge with an existing company listed on the stock market. He's back. The medium-term promise of Trump's media company is that it will replace Twitter for anybody wanting to keep track of Donald Trump's message. So I'm not going to read much more about that, but Donald Trump is looking to merge with a stock market company since Twitter and Facebook and pretty much every social media platform out there banned him during the 2020 election, because of everything that happened and politics and this and that. But he apparently, he's a billionaire investor, so he's creating his own social media platform. He's doing his own thing. So let it be. What stock market taught us this week: don't chase momentum, meaning don't FOMO in. That if there's something that you have to learn about crypto and investing, is that fear of missing out is a bitch. You usually get wrecked if you want to jump into a project or anything like that after everybody's talking about it. But our benchmark indices this week have lost some blood as the bears seem to establish their grip. Several stock valuations are skyrocketing, although fundamentals seem to be lagging behind. This is consistent with the Dow's theory of final phase, in which institutional investors consider smart money, gradually book profits during a steep rally, while retail investors, regular people, absorb those volume and keep the rally going. So this is a very interesting article, and it's pretty educational. This is a good learning opportunity. The smart money institutional investors, the Vanguard, the Fidelity, the JP Morgan, the banks, they buy the market at the bottom. So when regular people and institutions were selling. For example, March of last year during the pandemic fears, the institutional money was buying. And so once things settle down, they bought at that bottom, the market now is moving up, it's climbing up. And us, the regular people that don't do research, the uneducated, uh, they FOMO in. They like, oh, the stock market can never stop going up, just like the housing market back in 2018 or back in '08. You know, values are always gonna keep going up, and this, and that. At set time, those institutions are like, well, the party's coming to an end. Let me start taking profit. And regular people, they stay holding the bags. They stay holding the stocks until the party restarts again, or they panic sell. So they buy high and sell low at a loss because they think like they panic and they're like, oh, they're no, the values, the party's over, I lost this and that. Instead of just holding and learning from their lesson. The thing is, the saying goes, buy low, sell high, not buy high, sell low. So if you make the mistake of buying high, don't sell low, just hold it. You don't lose until you sell. That's my saying. This bull market began when the market fell to rock bottom valuations due to the pandemic. Institutional investors began buying stock after the announcement of a stimulus packages throughout the world, gushing liquidity, progressive opening of the economy, and improved business sentiment. FOMO spread like wildfire, and record number of investors joined the frenzy. In such situation, retail investors are likely to buy stocks, absorbing any prospective drop in the market without scrutinizing the fundamentals. So, meaning regular people just look at the price. They don't see like where things are going, how the market's going, is the government still spending money. They just buy it due to fear of missing out. While the institution, the smart money, they're like, well, the government spent what they were going to spend. People aren't buying anymore. People aren't going out. States are actually closing back up. So let me sell, let me take my profits, and let me go on a vacation. So keep that in mind. Don't FOMO into anything, whether it's crypto or stock market, commodities, whatever it is that you're investing in, housing, real estate. Don't FOMO in. Just wait. Prices will come back down, giving you the opportunity to buy. And David Tepper doesn't think stock markets are a great investment right here. He says it all depends on the rates. So hedge fund manager David Tepper has turned somewhat bearish on the stock market, citing uncertainties around interest rates and inflation. Just like I said, people are moving away from the stock market, so are billionaires. Keep that in mind. On one side, you see still the price going up while the smart money is pulling out. I don't think this is a great investment right here, Tepper said Friday on CNBC. I don't know how interest rates are going to behave next year. I don't think there is any great asset classes right now. I don't love stocks. I don't love bonds. I don't love junk bonds. The Federal Reserve has been keeping its benchmark short-term interest anchored near zero since the start of the pandemic. In recent weeks, officials have indicated that they're already starting to taper the monthly asset purchases, possibly starting in November. Many believe the rising inflation, which is running near a 30-year high, could put pressure on the central bank to push back on ultra-easy monetary policy, meaning the Fed is going to try to stop printing money. They're going to stop buying bonds to keep the price near zero. They're going to let it rise up. People are going to move away from stock market into bonds because the interest rate will be higher. They'll be able to make more money. And so, but right now it's a point of uncertainty. People don't know where things are going. They don't know if the pandemic will return, if closures will return. So tread carefully in these times. I like crypto right now. I think that it's the bear market and the parabolic moves hasn't occurred yet. We're in a nice sweet phase. I don't know if I would get into Bitcoin at these prices. I mean, Bitcoin just hit a new all-time high, But looking at other projects, there's oh my god, a plethora of projects to look into. Do your own research. There are some projects that still haven't hit their previous all-time high from 2017. XRP. I mean, multiple projects in the top 100. Look into those. Those are good places to put some money. I wouldn't recommend putting money in meme coins, but sometimes, if you want to gamble, you want to gamble. Maybe put some money that you're willing to lose in a meme coin. Not financial advice, just saying. But moving on, Democrats' confident cuts won't water down the bill. So they've been trying to pass a spending bill for the past, I don't know, 6 months now. But Democrats are brushing off the political risk of slashing their sweeping social spending measure, arguing voters will reward them for getting something done and not punish them because the legislation is less than 3.5 trillion. So they're arguing that getting something done is better than nothing at all. I somewhat agree with that. The spending bill, covers everything from infrastructure, roads, internet, trying to get internet to more remote areas and the such. The package now looks like it will top out at 2 trillion, and it appears that it won't include key components championed by progressives such as clean energy program and free community college. But Democrats say that getting something passed is better than nothing. I agree. That's more money that's unfortunately going to be spent and added to the deficit and the U.S. debt overall. I think we're close to 28 trillion at this point. It's something to be wary about, but if they pass this bill, it's gonna be good in the short term, get people back to work and whatnot. But let's see what happens in the next couple of weeks when it comes to the spending bill. And the debt ceiling problem is coming back in December. They passed a short-term bill a couple of weeks ago to keep the government open and not default on the U.S. debt. That is a topic for another day. We'll go into a little more depth about the debt ceiling and where it's going and how it can affect all of us. So this is all we have for today. I hope you guys enjoy the show. And again, we'll be doing this every single day at the same time, 12:30 Eastern Standard Time. My name is Crypto Junkie. You can find me on Twitter at CryptoJunkie300. And I tweet there every single day, almost hourly. So follow me. Make sure you guys subscribe to the channel. And we look forward to interacting with the public on the chat. Any questions, any suggestions on what topics we should cover, make sure to leave it in the comments. And see you in the next time.